wasn't any volume, and I'm not sure why, but I'm looking and I checked and everything should be good today. So my apologies. I guess you'll just have to ask some pretty smart questions today and we'll get to where we want to be. All right, what is today? Today is Thursday, the 15th day of May. How was that 8:30 news, guys? Did it move the market? Did anybody have a reaction? Did it spike? Did it jump? Did it bump in the night? Did it do something that might have disrupted your patterns? I wasn't even watching. I was grabbing breakfast when that happened. I don't even go near my computer during news. It was piddly. Right on. But I do check news every day, guys. And anytime I see high impact, I say to myself, this is something that could upset my patterns, and I choose not to trade into it. Let me give you the link. It's forexfactory.com/calendar. That's where I find the good stuff. The even better stuff, everything that I talk about each and every day, guys, it's all on the Nexgen page. One of the things that really does make me happy about working for Nexgen is there's no secrets, guys. We're here for you. We're here to try to make you better, to help you see more, to do more, and hopefully to completely change your quality of life for the better. And in that spirit, everything that I talk about, guys, is available to you. There is no buy more, get more, I need more. It's if I do it, if I see it, if I know it, I'll share it. But I can't share it all in this classroom. I just can't. Which contract, Pete? Because today is the roll day. We've got both June and July contracts right on. They were 50-50 this morning when I saw them, so I'm not even sure. Yeah, I did. I split mine. I did split mine. One of the things that I try to do each and every morning is keep you guys focused on keeping it simple, keeping it basic, keeping it focused. And simplicity in the beginning really, it pays dividends because, and I posted this room or this in the room earlier, guys, when you can name your trade, I am taking an XYZ trade. I'm taking a momentum trade. I'm taking an HVA trade. I'm taking a high probability trend trade, which happens to be what we're going to talk about for the next hour. What happens is you say to yourself, because this trade has a name, there's no doubt in my mind that this trade has rules. The rules go with the name. And if you can harness your emotions, if you can temper your desire to be in the market all the time and wait for the best of the times, what you'll do is you'll get to this point where you start saying, hey, I can't name this trade. I can't call this trade a high probability trend trade because it doesn't fit the description. My best choice may be to just sit out, to wait a minute. And we talk about this high probability trend trade in the first hour, sometimes first hour and a half, sometimes 2 hours, depends on your questions. Because this is a trade that typically wins 70 to 80% of the time if you just learn the very basic rules. All of that winning creates confidence. Confidence keeps you focused. Confidence keeps you coming back. Confidence builds that trust, guys, and that's what keeps you taking the best of the best trades. Most importantly, it's going to teach you to read your indicators. You're going to learn to read your charts through the high probability trend trade. My buddy Ron will tell you that this may not be your get-rich trade, but when you understand the concepts of this high probability trade, when it becomes second nature, you will begin to see the other trades, the other things that you can do with the software. 90% of your day, and I would wager to say 95% of your day, is spent reading your indicators, waiting for advantages. 10% of your day is actively trading, which means that if you're in front of your computer for 6 hours today looking to be a day trader, you're probably going to spend 36 minutes max actively in the market. And I would wager to say that it's less than that on a general day. When you understand this concept, these rules, these very basic rules, these easy to learn rules for the high probability trend trade, You're going to understand first where the market is likely to continue, guys. This is going to be your entry. This is where you are pinpointing and entering the market right where the established trend is most likely to bounce and go. You are going to understand where the market is likely to go. This is going to help you with targets. And you're going to understand where the market is likely to stop. And this is going to help you pump the brakes and sit on your hands and say, hey, I kind of need to not trade right now. I don't have the advantages I need. And all of this is going to come to you through the high probability trend trade. All of this is going to come to you through only 3 rules. Simplicity. We're going to go through this hour and we're going to break down all these rules. But it only takes 3 to find a high probability trend trade. You will be tempted to add more words, to add more looks, to add more things, guys. I want you to try to squash that temptation and keep it simple, because each of these rules, when true, provides an advantage. The advantage of momentum through strong triggers, the advantage of a clear path by not having any of those termination conditions, no areas likely to stop the market. And once you figure out these 2, guys, and I'm telling you, if you study it, if you take some pictures, if you devote yourself to understanding momentum and clear path, you'll have these lessons down in the first week easily. And once you have them, once you have these core values, I guess we'll call them, entry areas begin to present themselves. The next trade begins to present themselves. You'll find a way to capitalize based on momentum and path, guys. And the first way we're going to do it is with the trend trade entry. And that's what rule number 3 does. It defines exactly where the market is most likely to continue. It only takes 2 charts, to see these 3 rules met. Your first 2 rules happen on a large chart. Your large chart is a very slow moving chart. It's a broad stroke of a brush, guys. It shows the overall opinion of the market, and it takes this 1 bar on a large chart. That's it, 1 bar, the most current bar. It'll define the direction that you should be trading if you're following the rules. It will define the advantage of momentum through rule number 1, and it'll define the areas that could be problematic or that have already broken with rule number 2. Inside of this 1 bar, you'll see the inner workings on your entry chart. This is your small chart, the second chart. And this entry chart refines that big picture, and this is how you're going to pinpoint entries. Because inside of this 1 bar is typically a retracement. If the rules are met, if it's one of those winners, you're going to see a bounce off of an area, and you're going to see continuation in the direction of the trend. So this refinement chart has you pinpointing right where the market is most likely to continue. And small chart should only be looked at when the large chart says that it's time to find an entry. This is my favorite metaphor. Who are you trading with? Who are you trading against, guys? When you trade with the large chart, when you follow that trend, when you embrace that momentum, when you respect those areas, you're trading with the large crowd, the men and women that create the trends, that establish the momentum, that make decisions at these areas. And one of my, I think I got rid of it. So I had a picture. Let me see if I can find it. There it is. This is the large crowd, guys. It's the shark. Our job is to be the remora. Our job is to let these guys create all of our advantages, and then, Norbert, and then just cruise along with them and take a chunk. There's a guy that tried to be first. There are the people that like to fight. This is your small chart, guys. Your small chart are the fighters. And what happens is these guys say, we want to go up. We're going to establish a trend. We're going to create momentum. And your small crowd creates what's called a retracement, guys. And it's just a push down. This is that refinement process. When this chart doesn't change, you'll see that little down push. Rule number 3 is designed to get you into the market. Good morning, Estefania. Rule number 3 is designed to get you into the market right where the small crowd is most likely to fail, guys. And they fail typically 70 to 80% of the time. So where they're failing also happens to be where the market is most likely to bounce and continue with the trend. So know who you're trading against, or know who you're trading with. And know that the easiest way to make money is with momentum and path, guys. You're going to hear me say that a lot today. Our first hour, hour and a half, however long it takes, is going to be dedicated, excuse me, to learning the trigger line and the Fibonacci rules for when it's okay to trade. So when I say that, what I mean is we're going to learn how to identify strong triggers so that we can have the advantage of momentum. And we're going to learn to identify a termination condition to make sure you're not trading into one so that you can have a clear path. And we're going to take this hour and we're going to define the best of the best entry to enter the market. So when I say learn the rules for when it's okay to trade, guys, it's okay to trade when the rules are met. And if your rules are not met, it's okay to not trade. And I'm giving everyone in this room permission to do nothing when there's nothing to do. You all have the ability to simulate, to practice. And guys, I want to see everything that you're doing with this software. So if you take a trade, I want you to put it in the room. If you take a picture of a line on a chart and you're like, what the heck is this line? I want you to put it in the room, guys. I want you to be stingy with the time in the room. I want you to pretend like it's just the two of us. Because every time you post in this room, my expectation, my hope, is that you will describe the momentum on your large chart so that we can see if you're reading your indicators correctly to identify rule number 1. I want you to define your path, whether it's clear, whether it's potential, or whether it's a termination condition, so that I can make sure you're reading your indicators properly to have rule number 2 met. And I want you to show me your entry, and I want you to tell me why you entered. I want you to use words like pull back to an area inside of triggers so I can make sure that you're following these 3 simple rules, giving yourself the highest chance of success. So every time you post in my room, guys, it is a private session. It's just the 2 of us. I'm going to look at your chart and we're going to talk about it. We're going to address the chart reads, the entries, the exits. And I'm not going to tell you you did a good job or a bad job. What I'm going to do is I'm going to make sure that you're reading your indicators accurately. And more importantly, guys, I'm just going to give you a little bit of feedback. And I'm going to say, hey, you could have had a lower risk entry here. You could have had more profits by recognizing all this momentum. You didn't have to jump out. And together we will work to move forward. So post in the room, guys. Take advantage. Understand momentum and path. It opens the door for the second trade. And that's what we call a medium probability trade. And a medium probability trade says that most of your indicators agree with the trade. However, an issue exists, which means you're going to go right back to these core concepts, momentum, path, and entry, and you're going to say to yourself, if I'm missing momentum, it's a medium probability trade as long as I have a clear path and an entry area. If I don't have a clear path, it's a medium probability trend trade as long as I have momentum and an entry area. If I don't have the best entry area, but I have momentum and path, I might have to get a little creative, and it's a medium probability trade. So by learning 3 advantages and by recognizing and utilizing 3 advantages, you'll be able to know whether it's high probability, whether it's medium probability, or guys, if you just don't have what you need to take a trade, and that's your 90%. Your 90% is doing nothing. And I don't know about you guys, but I would be remiss if I took a trade when I looked at my chart and I said 66% of my advantages are gone. 66 of the things that typically bring success are now missing. And guys, this is a don't trade scenario. So learn to talk to yourself in terms of advantages. You've got to learn the looks. You've got to know what it looks like to have strong triggers to be able to identify strong triggers. And you've got to study these patterns, because that's all it is a pattern, so that it becomes easy. That is the second part of getting to where you want to be ASAP. And this says post your trades in class, track your real-time performance in a spreadsheet. So there was a time where Nexgen spreadsheet was nothing but a trade tracking sheet. And this is amazing. And this is good because you can post pictures that you have posted in the classroom into the spreadsheet. You can track whether or not you had those core advantages, and most importantly, you can put the feedback that you received over here in the notes section. And what you'll find is that if you go back every morning, take 3 or 4 minutes to study what you did yesterday, take 3 or 4 minutes to look at the pictures, to read your annotations, and compare your annotations to the feedback you received, what's going to happen is you're going to understand patterns that are bringing you success. You're going to understand patterns that are becoming problematic. And through the feedback, there it is right there, you're going to see things that repeat themselves. You're going to see things that show up in the comments over and over and over. And guys, that's your thing. Everybody has a thing as a brand new user. Everybody breaks a rule. Everybody makes a mistake. That's just part of being new. When you post in the room, you're going to get that feedback on how to identify it and, more importantly, how to fix it. Don't skip that step. The first tab is the basic rules, understanding what it looks like to have the advantage. Strong triggers, clear path, entries, all in green, rules met. You're going to learn them individually, and then you're going to learn how to put them together to create a high probability trend trade. And then in the red section, what it looks like to not have your rules met. Weak triggers, which happens to be the opposite of strong. This is that 90%. Termination conditions, which is really the opposite of a clear path. This is part of your 90%. So what you're doing is you're creating awareness of when you have an advantage, when you have an edge, and you're also creating an awareness of when it's okay to do nothing. The client trade section is about 500 pictures. These are all Nexgen user pictures. These are you guys using those 3 advantages, finding entries. I just steal them from the room and drop them in here as a study guide for new users. We've defined the entry sequence, how to pinpoint where the market is most likely to continue for both longs and shorts. I opened this one back up. You NASDAQ traders, there's some ideas on trading the NASDAQ. If you're a brand new trader, guys, I am going to warn you, maybe not warn you, yeah, I'm going to warn you. Don't get lured in by the siren song that is the NASDAQ. The NASDAQ moves fast, about 10 times faster than crude oil, about 10 times faster than the S&P. And guys, if you are not 100% in tune with exactly what you're looking for and where you're looking for it, the NASDAQ will eat your lunch, and it'll do it rapidly. There's a section on management, a very mechanical management plan that's going to be given to you in the plan that I hand you. And then also just patterns that repeat themselves. You're going to notice things outside of the high probability trend trade when defining the rules becomes easy. You're going to start to see opportunities, and you may build your own plan. Todd, NASDAQ should scare you. Trading is about waiting. And when you have a market that is erratic, that spikes a lot, that overruns, you get caught up in the adrenaline. And most people, when they move to the NASDAQ, overtrade. And I've seen people take 100 trades in a day in the NASDAQ when rules were met for like 10. The build your plan, guys, this is where you can put the pictures of your perfect pattern. My personal trade setup looks. What it looks like to have a high probability trend trade. And then as you grow and you start finding new trades, maybe you add an HVA trade, you'll start flooding this with pictures. You will ultimately build your own management plan through your experience. Start taking pictures. Same thing with patterns that repeat themselves. So this is what we're going to do. This is how we're going to do it, guys. It's going to be more of a lecture for the first hour. I totally get that, but I want you to feel comfortable. I want you to feel comfortable posting a question in the room. I want you to feel comfortable making me hit the pause button and re-explain something. This classroom gets amazing the more vocal you guys are. So we're going to learn these rules. We're going to break them down individually. And I want you guys maybe write a little note on a piece of paper in front of you. I will trade when my rules are met. I won't trade when they're not. So that means that we have to learn the rules. I want you guys to simulate, practice. Don't wait until you think you have it down perfect to start using that simulator. Get in there and make some mistakes, guys, and throw them in the room. And I'll teach you how to fix them. And keep it simple. Please keep it simple. Let's get really good at one thing before you add the second thing, guys. And that one thing is going to be the high probability trend trade. And it all starts with momentum through strong trigger lines. So we're going to take a look at it. Trigger lines. In order to have strong trigger lines, remember this is the large chart, the big chart, the slow chart, the hard to see change chart. In order to have strong trigger lines in an uptrend, both your small and large triggers must also be green like the background. In a downtrend when the background is red, small and large triggers must also be red. Strong triggers means in an uptrend that your small triggers are up and above the large triggers. Large triggers are wide and there's space between them. There's a gap between the small and large. In a downtrend, smalls are below the large. There's a gap between small and large. This opening, this space, it looks like scissors that are open. Guys, this lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. OFM, you're going to see it annotated on charts all day long because strong triggers push a market. Strong triggers are what we look for to break key areas. Strong triggers are when we're buying Fibonacci support, selling Fibonacci resistance on that smaller, faster refinement chart. It looks like a tail on a large chart. It looks like a full pullback on the small. So every time you see the rules met on a large chart in one of these tails, you're going to say to yourself, man, that might have been an entry. And guys, strong triggers can cover some of the mistakes that new users tend to make. So strong triggers is nothing more than a separation. I want you to think about scissors open. And then when your scissors close, when the small triggers work their way inside of the large triggers, guys, we call this weakness. I'm a big fan of words. Strong, weak, odds favorable momentum, and guys, with weakness, anything can happen up or down. And when I say anything can happen up or down, I mean anything, guys. The market could keep going down. The market could retrace from the middle of nowhere. And when you have these weak triggers, that's when key Fibonacci areas are more likely to hold. So let's go to, this is crude oil. And I want you to see strong triggers. And there's a couple potential entries. There's another potential entry. Strong triggers. And how easy is this picture? This is what you're going to do. You're going to take that picture, scissors open, colors match, odds favorable momentum, rule 1 met. And guys, what you've just done is you've identified strong triggers down and you've identified strong triggers up. Can you guys give me a Y if you're good with strength? That's what it looks like. Always, consistently. And then look at this. Scissors closed. No momentum. Rule 1 not met. Sit on my hands and wait. That's it. And the cool thing is that if your job, if your hope, if your desire, if your plan is to only trade when the rules are met, it means that this is where you can look for a trade, when the colors match, when the separation is present until it goes away. And that's what it looks like to have strong triggers up and down. And that means that anytime, watch this, the smalls are inside of the large, the smalls are inside of the large, inside. Guys, that is your big red flag that says you don't have the advantage. It's okay to do nothing. And I don't think it's a coincidence that 4 out of 5 reversals came with a loss of momentum on this chart. So that's rule number 1. It is rule number 1 for a reason. Momentum is amazing, guys. Momentum is hard to stop on a large chart. But there are things that can stop it. We call them termination conditions. And a termination condition, when there are none, means that you're going to have room to your targets. And when you have room to your targets, we're simply going to call it a clear path. And a termination condition, guys, on the large chart, it's a large chart, rule number 2. It's an area that could stop the market, that could create a reversal, that could create a bounce. And in these areas on the large chart, divergence highs, divergence lows, resistance, support, yellow 1-to-1s, even a mid-band. These are where the large crowd are making decisions. These are the most likely points for highs and lows. These are where The people that control the market are most likely to enter, to exit, and to fight one another. You'll know about these areas long before you get to them. You'll see them looming off in the distance. And if you just accept, this is where decisions are made. It makes it easier to remember the rule to identify a termination condition, because it all begins with price reaching an area. Whether it is resistance, magenta high, cyan low, 1-to-1s. Guys, when price reaches the area, it sets off the decision-making process by the large crowd, and we're done with price. All we do is we let it push, let it push, let it push. When it gets there, the trigger lines will tell the story. And when price reaches an area, I want you to get in the habit of asking yourself, where are the triggers? And if the trigger lines remain below resistance, or the trigger lines remain above support, or below resistance, it's consistent, then that's a termination condition. That's an area that could stop the market. That is an area that could break, typically with momentum. It's an area that could create a fight that you don't want to be a part of. So learn the simple recipe. If price reaches an area, ask yourself where the triggers are. If they're below resistance, above support, sit on your hands and do nothing. Rule number 2 is not met. Wait for your clear path. There's 2 ways to get a clear path. One is a breakout, and a breakout means that even though price reached resistance, both your small triggers and your large triggers got above that area of resistance. That's the recipe for breaking an area, for clearing that path. When both the small triggers and the large triggers get above the area that was a termination condition, that breakout gives me a clear path. You may find an opportunity to carry it up to the next key area. Your path remains clear until you reach the next area, and then you have to ask that magical question again, where are my triggers? You can also get a clear path from a reversal. Here's the termination condition. Well, it reverses the market, and small and large triggers have momentum. Price has not reached the next area, guys. This is a clear path as well. So from a breakout or from a reversal, but a clear path means that you haven't reached the next area and the previous area is no longer a concern. The easiest trades you will ever take, and these are those tails on the large chart, are when you have momentum and when the path is clear, guys. And this is where you're going to be able to capitalize, where you're going to be able to find that entry, where that trend is most likely to continue, where that momentum is most likely to push the market. You're going to understand where the market is likely to go because you see that fib off in the distance with all that momentum. And you're also going to understand that that's an area that could stop the market because that's where decisions are made. The easiest money you will ever make will have both momentum and path. You guys good with that? That is rules 1 and 2 in a nutshell. Let's see if there's any truth to rule number 2. We'll start up here. Divergence high, support, resistance, support, divergence high, and then it breaks. Pulls back to resistance, continues with the trend, hits support, back to resistance, back to support, back to resistance. This is that fight, and resumes the trend. And then we get to the bottom. Got 3 divergences hanging out, weak triggers. That's where the uptrend starts. Do you guys see that tail? That tail is the fight between buyers and sellers, right at a fib. That tail is a potential entry with odds favorable, momentum, and a clear path. That tail is a potential entry with odds favorable, momentum, and a clear path. We're going to go back and look at those tails and see if they created an entry. There is weakness right at a fib. There's your big retracement. They retest the fib, and now they're down, and they are directly into Fibonacci support, even though they have odds favorable momentum. Guys, there's a lot of good examples of termination conditions doing their job. One of the things about termination conditions that I really want to stress to you guys is we didn't create that rule based on the one time that the market held or the one time that the market broke. Guys, termination conditions were defined over years and thousands of pictures. And every time you trade into an area and the triggers haven't broken it, you lose your advantage, you lose your edge, and you find yourself using hope rather than advantages when you trade. And that's a great picture. That is 11 and a half hours. That is 36 times rule number 2 kept you out of a loser. And then there were opportunities with the rule met about 5 or 6 times in there. 90% of your day is going to be doing nothing. And that is large chart terminations, guys. Big chart leading the way, big chart letting you know when it's time to stop taking the trades. There is one termination condition on a small chart, and it's 3 divergences in the same price range. 3 losses of momentum in the same price range. And guys, I apologize if I'm not being very loud. 3 losses of momentum in the same area can show change that you can't see on that large chart. So the large chart may say, hey, it's really strong down and there's the potential for that area to break. And your small chart steps up and says, yeah, here's 3 losses of momentum, 3 divergences. We might push up a little higher than you want us to. We might even reverse the market. This is the only look on a small chart that will keep me out of a high probability trend trade. 3 divergences in the same price range is the only time I will hit the brakes and not look for an entry when I have momentum and path. So large chart has now done its job, guys. Large chart is going to give me that first advantage of momentum. Large chart is going to let me know that there's nothing in the way to create a bounce. I'm going to go to my small chart and look for an entry, guys. And that small chart, that refinement chart, I have Friday, Saturday, Sunday. I have 3 days off, Andy. I will be right as rain by the time we come to Monday. Your entry rules, yeah, my wife too. She tells me she's not on call. She's like, don't you hurt yourself today. I'm not on call. Guys, your entry is very precise. Your entry is designed to put you into the market right where the market is most likely to continue. That entry is designed to put you into the market right where the small crowd is most likely to fail. And it's so precise that you're going to use a limit order. And you're going to use a limit order to buy or sell a pullback in an area. And that pullback is that little refinement that you see, that little push against the trend. And we want that area to be inside of triggers, guys. And this saying works to define your entry area. So when you are looking as a brand new user to define entries, I want you to use the phrase pull back at an area inside of triggers. Because when the large chart says strong and nothing in the way, this reversal bar begins the pullback. That's the start of the push up. Trigger lines, large and synthetic, will define where that retracement is most likely to go. Areas inside of that retracement zone will define where it's most likely to bounce. Guys, it takes 1 bar of a large chart to know your rules are met. Inside the bar, you're going to see the reversal, the pullback, the bounce, and the continuation down in a successful trade. So when you are defining your entry, there's going to be a little fear in your head. Your large chart is going to be screaming down with nothing in the way. Can you guys hear me? Give me a Y if you can hear me, please. Everybody lost it? Nope. Okay, so it's Pete. Pete knows to reboot. Guys, if you ever can't hear me, just let me know. And if you see a flood of Ys after... I'm so sorry. Let me see if I can make my microphone go up higher. Let me double check. Volume, input. All right, I'm going to put my microphone all the way up. Hopefully that's a little helpful. Okay, cool. Guys, everything is going to be screaming down when it's time to look for an entry. You're going to wait for the reversal bar. The reversal bar starts the pullback. It's the beginning of the fight from the small crowd. Once this reversal bar prints, and with a little experience before it ever prints, you're going to look over at these triggers, large and synthetic, and you're going to say, all right, if they start pushing up, they're most likely to push up somewhere from the bottom of those triggers to the top of those triggers. I don't know where I don't know where it's going to go, but somewhere in that range. And then once you define the retracement zone, you're going to say, all right, I need something solid for that market to bounce off of. I need something solid for price to bounce off of. Guys, that is areas inside of triggers. Um, Again, guys, give me a Y if you can hear me, please. All these guys telling me no sound, they know what to do. So go to your task manager, go to Discord, kill it. Bye, guys. Sometimes you can still hear me. I'm gonna bring it back up. Sorry, YouTubers. Boom, 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 boom. Coming back through. Education. That's not education. Can you guys hear me now? It's like the T-Mobile thing. Can you hear me now? Yeah? Awesome. Let's pinpoint entries, guys. Trigger lines define the retracement. Areas inside of triggers define the bounce. You're going to activate a limit order 2 ticks below the area closest to your reversal bar, the lowest point of resistance. And anything beyond the triggers where the market is likely to retrace, anything beyond the areas inside of those triggers, guys, this is where the advantage of rule number 3 is no longer in place. This is actually where the market should not go. Entries are not taken for high probability trend trades from areas beyond the triggers. So you're going to learn to ignore any fib, any mid-band, any yellow 1-to-1 on what I call the wrong side of the triggers. In an uptrend, when the rules are true, the market is screaming north, and you're going to have to squash that fear of missing out. Reversal bar begins the pullback. The reversal bar is not your entry. The reversal bar lets you know that the fight is on with the small crowd. Where is that retracement most likely to go? Somewhere from the top of the large triggers to the bottom, larger synthetic. This zone is where those bars are most likely to push down. It's the areas inside. I want you to think of areas as a brick wall, and your price is a tennis ball. The same way they can stop a trend on the large chart, they can stop the small crowd fight when they're inside of triggers on the small chart. And guys, your entry is going to go 2 ticks above the area closest to the reversal bar inside of triggers. And it's so imperative that when you're learning these rules that you write inside of triggers every time, inside of triggers. Because once I get below those triggers, I don't know if the market's going to go up. I don't know when the market's going to go up. I don't know where the market may go up. The advantage of rule number 3, that precision is out the window. This is where the market should not go. And you're going to use that concept for your initial stop placement. Remember, we are discussing a trade that when you follow the rules typically wins 70 to 80% of the time. That means that 20 to 30% of the time, the market is going to push through everything good. It's going to push through the retracement zone. It's going to push through the areas inside of it. And guys, we're going to catch it with a stop loss. And we are going to accept and embrace losers as a cost of doing business. Because if this one wins 70 to 80% of the time typically, it's obligated to lose 20 to 30% of the time. We're not going to let those losses become huge. We're going to put our initial stop 4 to 5 ticks above all the trigger lines, below all the trigger lines, where the market should not go. And great entries create very manageable trades. Your job is to recognize this pattern. And that's all it is it's a pattern. It's a pattern that repeats itself each and every day. It's a pattern that you can test. It's a pattern that's repeatable. It's a pattern that you can verify. And when you have momentum, when you have path, If you scroll back historically on your charts, you're going to see those tails, those potential entries. We don't trade tails, guys. We don't try to time out a tail and hope we get into the market at the low spot. We buy areas of support inside of triggers. And this is where the advantage is. Because when you buy low, and Fibonacci inside of triggers shows you where low is, it gives you the most room to your target. It gives you the least amount of risk in a trade. And guys, this is the magic. So what you can do as a brand new user is you can stop trying to become a professional day trader by taking trades. You can dedicate 3 or 4 minutes, 5 minutes, 10 minutes of your day each and every day and go look for the pattern to be true, guys. Odds favorable momentum. The path is clear. There's a tail. There's your entry in an area inside of triggers. And then they came back for you. Odds favorable momentum, clear path, and they pulled back once again. And guys, this is what you need to learn. You need to learn those core advantages on the large chart. And then when you have them, you will find a way. That's one of the ways you can do it. I took this trade. I happened to catch it right after I came back from coffee. And if you scroll up in the room, ladies and gentlemen, you will see my trade from entry, every stop move, all the way down to exit. So if you're wondering, all right, does he handpick these trades just to try to make us think that it's the right thing to do? No. Check it out. I got in on the reversal bar, which is actually a later entry. I took problems at a problem that I had on a different chart, and I made sure that I got paid because that's the goal of trading. And as the market moved up, I continually followed pivots and reduced my risk throughout the whole trade. And then eventually, they got me right up there at that decision-making zone. And I don't feel bad about it. That was $190 for 5 minutes of my life. Not too terribly bad. I probably took 10 pictures, start to finish. I took pictures of management. I took pictures of entry. I took pictures of exit. And I annotated every chart with what I was doing. And guys, if you took that trade, that was a hell of a good runner. So how do you get to where you want to be? Make the looks easy, guys. That's the best thing you can do. Here's the easiest way to do it. And again, I'm going to tell you the road to confidence comes through pictures initially, and then those pictures lead you to all that practice. Chart Reading 101, I created to help you guys that continually look for the money instead of the advantages. I did this to help the people that are insistent on going to the finish line rather than running the race. And what this does is it keeps you focused on your large chart, and it starts to build some trust in those rules. So I encourage you, take 25 pictures each. Strong triggers, weak triggers, know the difference. Annotate the charts. Talk about why they are strong. Talk about why they are weak. We took this picture this morning, and it took us all of, 2 minutes to identify strength and weakness. If you do this 25 times, you're not going to confuse the two. You're going to know when it's time to look for your entries. You're going to know when that advantage is there. That's your commitment. Same thing with a clear path and terminations, guys. Go through that process, do it over, and then post them in your spreadsheet. That first page, load it up. I've given you a huge head start. If you take the time to put your own 25 in there of each, rather than relying on becoming smarter just looking at my pictures, guys, you're going to get to where you want to be faster. As you take those pictures, I'm going to give you the high probability trend trade checklist as well. This is what it looks like to have your rules met. This is also a checklist that is the best of the best, guys. And it starts with what we call a strong top or a strong bottom. This isn't rule number one. There's only three rules. But if I have a strong top or bottom, it sets me up for the highest probability trend trade I could ever take. Can you guys hear me? Did everybody lose me? All right. Discord's giving me fits today. That's okay. Alright guys, did that help? That was a reboot. I don't know what's up with Discord. We're okay now? Some of you can, some of you can't. Give me a Y if you can hear me. Nobody can hear me at all? Some of you can. Okay. Guys, that leads me to believe it's not on my end. All right. YouTubers, once again, guys, I'm going to kill the whole thing. Boom. All right. Coming back in. How do we do? Can you hear me? All good, loud and clear, 5x5. Everybody's happy. I saw your avatar, Gary. I went with the 5x5. Cool. All right. The return of the Discord audio issues. Yeah, we didn't have them for a long time, huh, Morgan? So guys, is the market coming from a strong top or bottom? Was there a termination condition that the triggers didn't break through the area that reversed the market? If there was, this gives you a lot of warm fuzzies, guys. This makes you feel good about that high probability trend trade. The highest probability trend trade you could ever take comes from a strong top or bottom. You can still take a high probability trend trade without it, but if you see it, guys, you should get excited about it. Strong top or bottom is also rule number 1 for pretty much every other trade Nexgen teaches. The checklist is going to ask you if you have strength, if the strong triggers are there, if the momentum is present. Momentum looks the same every time. It doesn't change based on your opinion. It has nothing to do with Fibonacci, price bars. It's just a separation of the triggers. Weakness is your cue to stay out. Is it a termination condition? Did the triggers break and give you a clear path? As a brand new user, those are your two options. It's either pump the brakes, do absolutely nothing, or I have a clear path, let's trade. There's a magical moment in between termination and clear path. And guys, this is what we call a 50-50 look. This is the second trade on your trading plan that I'm about to give you. With all of this momentum, when your small triggers smash through the area but the larger lagging behind, that area has the potential to break. But it's only potential. So you have to manage a little more assertively. And then defining your entry, and guys, areas inside of favorable large triggers. So the second page is just that checklist. You can print it out and put it on your desktop. Again, I'm going to encourage you guys, every trade that you take, I want you to write these 3 rules on it at least. I prefer all the top or bottom as well. But if every trade you take, whether you followed the rules or not, you're getting in the habit of writing strong triggers, clear path entry inside of triggers, what you're doing is you're reminding yourself exactly what you're looking for. You're creating this recipe for success. And what happens is you'll never ask yourself, is it a good trade? Is it a bad trade? You'll ask yourself, is it a rules met trade, the right trade, or should I have stayed out of the trade, guys? Nobody in the history of this checklist has been able to follow these rules truthfully and do worse than 70%, and that's pretty cool. And then finally, the KISS plan. The KISS plan is a stepping stone in your learning journey, guys. This is your first trade, not your only trade, not your get rich trade. Well, it can be actually, but this is the trade that helps you see the other opportunities that the software provides. But this KISS plan is designed to optimize your chances of success with that high probability trend trade as you learn to read your indicators, as you learn to recognize advantages. It'll be through simulation, study, class feedback, and continuous practice. You'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, when you can read your indicators, when you can speak to yourself in terms of advantages, you will find more opportunities in the market. But there's two things that you have to know before you sit down and not trade on simulator. You have to know why you'll enter the market, guys. And the generic Sunday school answer is because my rules are met. Because I have the advantages I need. Because I have proven that this pattern wins more than it loses. I have verified it. I have tested it. I have taken 1,000 pictures of it, and there is no doubt in my mind that this pattern creates an edge, which means there's no reason to not enter that trade if the rules are met. And because you know that that pattern both wins and loses, it means that you're going to start losing the emotions. You're going to say, I have what I need. I know where the market shouldn't go. It's either going to go or it's not. I'll never be in control of that. And then you have to know why you'll exit, guys. Management plans are built as you learn to read indicators. It is my opinion, and my opinion is worth exactly what you're paying for it, nothing. It is my opinion that you have to have a regimented management plan. If you leave management to emotion, you're probably going to struggle. If you leave management to what you feel in the moment, you're probably going to struggle, guys. Have a very clear set of rules for management. Know exactly what it takes to get you out. As a brand new user, you're getting out when the advantages you had to enter have gone away. When the market changes and the good stuff isn't there anymore, or at profit targets. So if you're defining your entry, if you're getting in at the best of the best spot, you're creating a manageable trade. You're giving yourself the advantage. You're putting yourself in a position to win more than you lose. And then once you're in, you have to manage that trade. This is, I think, management is probably where I fell short the most as a brand new user, because once I entered the market, I felt like I had something to lose. I didn't want to give that money back. And because of my own shortcomings, I created the KISS management plan, and it's based on 2 contracts, guys. The first contract is the get paid contract, because that's the goal of trading. And it seems weird that you would have to do this, but you're going to have to teach yourself to accept profits and exit positions, because that little monster talking in your ear is going to tell you to hold longer. What if there's more money? The second contract in the KISS plan is designed to get you to trust the large chart. It's designed to get you to believe in the advantages of momentum and clear path, and that one's going to run a little bit further. It's also going to help you understand stop placement, guys. So the management plan and the KISS plan is super if-then. It's very pragmatic. It's emotionless. If this happens, then I'll do this. And I use the word encourage a lot because I don't give trading advice. Until you can develop your own management plan, it's okay to use this very simple plan, because what it's going to do for you is, one, it's going to make sure that you got into the market where the market was most likely to continue, at the areas inside of triggers. And it just goes if then. If my entry is 2 ticks below resistance inside of triggers, then my initial stop is 4 to 5 ticks beyond the triggers. It's clearly defined. You know exactly where to put it. And you're going to say to yourself, this is where the market should not go. If this is going to be one of those winners, this is where it shouldn't go. This is where they're going to have to come get me, because it means that they made it through the areas most likely to create a bounce, It means that they made it through the zone where they're most likely to retrace, and I don't want to be a trade. I don't want to be in a trade up here. And you will know your risk before you ever take a trade. You'll know your risk when the market is over here before you ever get a reversal bar. You have to accept that risk, because if you try to put a stop inside of triggers, if you try to put a stop at areas inside of those triggers, guys, you're very likely to get stopped out only to watch the market go in the direction that your indicators told you it was going to go. If you can't accept $150 per contract, it's better just to not take the trade. Targets are predefined at $100 and $200. So, Estefania, you're going to know where your entry is per the rules, right? Areas inside of favorable large triggers. Your initial stop on this plan says that you have to put your stop 4 or 5 ticks above those triggers. So if my limit order is waiting at 71.34, I know that my stop, if I enter that trade, is going to be at 71.49. I know that I will have $150 of risk per contract. Does that make sense? And then let me go to the second, why it's so important to accept the risk. If I decide to try to beat the system and I put a stop, well, I'll risk 50 bucks. I'm right at an area inside of triggers, and that market has the potential to hit my stop, take me out of a position, and drop with those large chart advantages. Even if I put my stop inside of the retracement zone, there's still the potential that that market could come up, retrace right to the top of those triggers, and then continue down. And what happens is I'm taking a loss in a trade that should have been a winner because I wasn't willing to accept risk. Does that make sense? Awesome. So here's my stop, here's my entry, there's my target. One of two things is going to happen, guys. It's either going to hit my stop, I'm going to accept the loss, I'm going to wait for the next trade, or I'm going to get a reversal bar in the direction of my trade. The reversal bar in the direction of your trade means that the market is confirming that it's now going down from the area where it's most likely to go down from. It's confirming that it's going in the direction of the overall trend, momentum, and clear path. This confirmation bar will have you redefine where the market should not go. 2 ticks above it. And let me add something to this, guys. If you are terrified to sell the market while it's on the way up on the small chart, you can enter on a confirmation bar and have your stop right behind it. That may create a little less risk. Estefania, if you don't want $150 per contract all the way up here, you can enter on a reversal bar, but you're still going to have guaranteed at least $120, $130 worth of risk, because this bar is 12 ticks long, which means you're 14 ticks away from the bottom of the bar, and now your targets are even further away. This feels like, oh, it's confirmation, life is good, let me do that. But the reality is, ultimately, the least amount of risk and the highest profit, the easiest to gain profits, guys, comes from the areas inside of favorable large triggers. If you get the reversal bar, you redefine where the market should not go. Your new stop is 2 ticks above that reversal bar. You now have $30 worth of risk on this trade per contract. You've gone from 300 to 60, guys. Confirmation bars do not guarantee a winner. They're not saying, well, now the market has to go down, but it means you're at least taking a pretty small loss if you do take a loss. If they don't get you, it means that you went to your first target. The first target in the KISS plan, its only intention, guys, is to teach you how to get paid, to teach you to accept that getting paid is the goal of trading and that it's okay to take profits and exit a position. We all struggle with that. So if it hits a $100 target, it's only 8 ticks on the S&P, guys. It's only 10 on crude. That money goes into your account. There's $100 in your account. Life is good. You've been paid. It really takes a lot of the stress out. Your new stop is at break even. You have absolutely nothing to lose and you've been paid, guys. And that's what's going to help you learn to trust the large chart. Your break even, not because it's the best stop as an experienced trader, but as a new trader, it's going to help you do nothing and learn to believe in those large chart advantages. Learn to believe in that momentum. Learn to believe in that clear path. And it's either going to come get you break even, and that happens sometimes, or it's going to run to your second target. And that second target is $200 away from the entry, which means that over the course of 3 or 4 minutes, you just made $300 on the highest probability trend trade ever. And you have to remind yourself that the market might continue down. That's okay. That's not your money. But $300, if that's the best you do every day, is a $75,000 year. Guys, if the best you do is take profits and get stopped out break even, 1 trade a day, it's still 25 grand in your account. Figure out a way to grab $100 4 times a day. You're in 6 figures, guys. The goal of trading is to get paid. And one of my favorite phrases is base hits pay bills. Base hits add up, guys. Your account doesn't know how you got to $500. Your account doesn't know how you got to $1,000. All your account knows is that you're consistently taking profits, and consistent profits are the goal of traders. So learn how to get paid, guys. The KISS plan's important for that. And it takes you, once you understand the first trade, the second trade is on there. It's that potential to break trade, and it has a different set of rules, and it has a different way to manage it. So it's important that you know what you're focused on. I promise you guys every morning everything you need to be successful. There is the spreadsheet with all of the looks, the rules, the trade tracking, all the good stuff. I'm also giving you the all you need file. This is a zip file. Download it. Get it on your computer. Put it in a file. Inside of the all you need zip, guys, is the chart reading 101. It's the high probability trend trade checklist. It's the KISS plan. It's the daily goals. Guys, it is also what I call exit conditions. And we talked about this a little bit this morning. Why name your trades? If you have a name for a trade, you know what the rules are to have that trade met. You also know what your management plan is for that one. Be able to name your trades. If you can't name the type of trade you're taking, you're probably not following your plan. There's also a file in there called the pictures you can take. And these are the pictures that I take, guys. And these are how I get to where I want to be. I take pre-trade to make sure that my rules are met. I go back and study it long after the trade is over, make sure I didn't miss something. I take pictures during the trade. You guys witnessed it live in the room this morning as I took my trade from entry to exit. And I don't even know if it's going to fit in here anymore. I just kept taking pictures over and over. How am I managing it? What am I doing? Why did I move my stop? Where did I move my stop to? And guys, that's still not it for one trade. There it is. Here it is. Everything's up. We'll see what happens. That's my look. There's my picture. That's why I moved my stop. Oh my gosh, that's what I did, and dag nabbit, the trade is over. Guys, I took probably 12 pictures during that trade. I want you to take the picture after the trade from start to finish, and that's the one you're going to drop in the room for feedback, remembering to describe your rules. Were they met? Were they not met? If you broke a rule, talk about why you broke it. I know I traded into a termination condition, but because of the momentum, I was willing to take a chance. And then I take pictures when the rules aren't met. Jen taught me to do this. If I have termination conditions, I'll take a picture and I'll write on there, I'm not taking this trade into a termination condition. If I don't have momentum, I'll take a picture. Instead of taking a trade, I'm not taking that trade without momentum. There's also the PowerPoint that I used to teach this morning. And then finally, there's this one. This is the Trend Trade Simple document, guys. And this is just the document. If you go to that Nexgen page and you go in and you look and it describes the high probability trend trade, that page is based off of this document. It tells you exactly what I teach, how I teach it, why I teach it, that momentum and path are your core. It shows you the rules, where to find them, the indicators that you're using, and then it breaks it all the way down how to study. So if you are one of the people like me that want it simple and consolidated, 2 pages, everything we've just talked about in the last hours. So download that, get that, and then as we head into the second hour, it's going to be 100% feedback based, guys. The second hour is dedicated to your pictures. It's dedicated to your chart reads, to your annotated charts. And I remind you guys, as we go into the second hour, that the key to everything is having a foundation, that you're going to understand some basics, and then you're going to compound each and every day. You're going to move forward each and every day. So for you new users, DeLuca, talking to you, Bejoy, Aaron, you guys that are still finding your footing. Guys, I blanket you with very conservative rules. I talk extensively about the recognition of advantages, and I hand you a solid plan, a repeatable plan that optimizes your chances of success as you learn to read your indicators. So if you're in my room and you're brand new, you're going to feel like all terminations, no momentum, areas outside of triggers are all horrific, terrible, life-ruining things, guys. And for the brand new user, they are, because when you follow those rules, you increase the likelihood of success and you build that confidence. You'll find as you grow with the software, your plan may change a little bit. Guys, give me a Y if you can hear me, please. I'm about done with Discord today. All right, yeah. Joel will know to reboot. Guys, the more time you spend with the software, the more you're going to see. And the more you see, there's 2 things that happen. The first thing is you're going to be tempted to trade your opinions and your chart reads rather than your rules. I want you to know that you should be focused on not doing that. But you're also going to begin to see patterns that can adjust your plan a little bit. You are going to see patterns that may be incorporated into a new plan. Trading plans are living documents. They're rarely cast in concrete, guys. Learn the process that yields the results. Mark Douglas, one of the most amazing people on the psychology of trading, used to say that he didn't care about results. He focused on the process that creates the results, and the results seem to follow, because all we're doing is trading a pattern. And that's where the KISS plan comes in, guys. If you keep it that basic, if you follow simple rules, if you're okay not looking for all the trades, but rather the best, you can find an extraordinary level of success. The more you deviate from simple, guys, the more you try to find the money instead of trying to find the advantages, the longer it takes you to get to where you want to be. Watched it for years. So question everything. If you have a question, it's not a trade, do what Morgan did. Drop it in the room. Hey, Mark, I have a question. Bottom with a tick. So I would say strong bottom. How do you figure that's within a tick? That is 86, and the market went down to 84 and change. 85. That's 4 ticks, Morgan. Isn't it? But you could say, man, that's probably a little overrun. And that's where you have to make a judgment call. Yeah, but it's through, right? The trigger is through. Keep it black or white. You could say that's a little overrun. I had weakness. I had divergence. Keep it black or white. And Morgan, you're at the point where you can say, you know what? That is so freaking close. I'll take this trade. But what you didn't like was fib after fib after fib after this after that. Guys, there's going to be times when you just sit on your hands and do nothing because you're like, my rules aren't met. And then you're going to post the picture in the room and you're going to say, Mark, could I have broken my rules? Could I have taken a trade? Could I have been in this market on a 50-50 trade? And Morgan, let's look. Could you have? Were their rules met? So this particular tail was directly into a termination condition. This tail was directly into a termination condition. This third tail, Morgan, that's the only true 50-50. And there it is right there. Do you see it? No triggers through, no triggers through. This is the only one that even fit the recipe for a 50-50. Could you take that trade? Hell yeah, you could, if it fits your plan. But what you'll do after, guys, when you look at your charts historically, if you don't go back and say, were my rules met, and ultimately no, you start feeling like you missed out on everything in the world. Does that make sense? So when you do historical study, when you go back and look at a chart, don't go back looking and saying the market went up, I should have been in. Go back and say, hey, were my rules met? And Morgan, the only place your rules were met were right there. And absolutely, you'll notice that one probably had the least amount of risk too. Good question. And guys, we'll go through that each and every day. We'll go through every picture that you guys post. But one of the things I used to do, Morgan, and I'll do this again, is I would see this, right? I would go back and look at the chart. Maybe I was walking the dog or having coffee, and I'd say, man, everything was down and strong, but I would have entered right on that divergence because I knew the divergence was coming. And then I would have got paid right there because I knew that that area was going to create a bounce. And I would have got in at the area inside of triggers because I'm pretty sure that's a rule. And then this divergence, I would have exited right at the high tick and then re-entered twice and got out at the high ticks and re-entered again. I would have taken half my profits here, but I would have put a 10 lot on there and I would have got paid right at that high tick. Because let's face it, guys, I'm pretty kick-ass. And when I go back and look at a market historically, I can tell you all the things that I would have done in my greatness. But the reality is rules are what keep me safe. Rules are what give me advantages. And there was one trade. There was one trade in all of that movement that fit a plan that I have. And that would have been enough for an easy $300. And I don't know what the timestamps were in that range, but I don't imagine it was too terribly much. When you do historical study, ask yourself if the rules were met. Not, could I have made money breaking my rules? Trust me on this one. All right, guys, I'm going to take 5 minutes. I'm going to rest my voice. I'm going to get a throat lozenge. When I come back, we're going to look at the charts that you guys have posted. We're going to go back to those 3 advantages on every chart. I don't care what kind of trade you took because it's an educational room. I'll leave you guys with the live market. And the live market had weak triggers at a divergence high. And look at the reversal. Giddy up, baby. I love termination conditions. And the S&P, there's your weak triggers. And I love weakness, telling me not to take that next long trade. And I'm not sure there was an opportunity in there. Maybe one of those Nexgen momentum trades right there. All right, guys, let's see if that potential to break comes true. I'll see you in 5 minutes. Go stretch your legs. YouTube real quick. I guess the potential didn't work out, did it? 1, 2, 3 divergences in the same price range. It's almost like patterns are repeatable, that you can create expectations based on the pattern that you see. And sure enough, big untradeable bounce, come back, retest support, and off it goes. And we'll see what happens. I'm going to scroll up to the top of the room, guys. We're going to start looking at the pictures that you guys have posted. If I miss a picture or a question, please let me know. Don't let me get away with that. And let me see. All right, Cav, I think you got us going. And Cav, let's see what you did, man. Cav just says, check it out. It's a good top. Trigger's turning. And Cav, respectfully, and guys, I'm going to go back to language, because I do believe language is important. Cav, it sure has the potential to be a good top. It does. The potential is there for it to be a good top. But your large triggers are still cranking up, and your small triggers aren't below them. And while this is definitely a don't take a long trade into the area if you're following rules look, it's not a good top yet, because those triggers have to roll to be a strong top. But absolutely, that's a great looking spot for the market to turn and head down. Did it? I don't remember. It's 740. It looks like it did. It gave a pretty good push down from there. I like it though. These are great pictures, guys. And Cav, I'm going to elaborate, and forgive me if I'm putting words in your mouth that aren't true. Cav's saying, I'm not taking a trade here. What he's doing is he's saying this is an area of importance. This is an area where if it does reverse the market, I'm going to look for an opportunity short. If it can't get through these areas and continues up, I'm going to look for an opportunity long. But right now, my highest chance of success comes from doing nothing, taking a picture instead of a trade. Is that fair, Cav? I love these pictures. These are the pictures that build patience. These are the pictures that have you start asking yourself, are my rules met? That would be the picture if you're an HVA trader that would get you looking at smaller charts and saying, I wonder if there's an opportunity based off that Fibonacci area that's holding. Good stuff. All right, let's see who's next. Thanks for that, Cav. And I said it yesterday, and I firmly believe it. You more experienced users that come in here and drop these pictures for the rest of the crew, it's pretty awesome. It's a no triggers through, Jen. Could we agree that that's exactly what that is? So when I see this look, that gets me looking for that HVA line to see if maybe there's an opportunity for a short. Because if it doesn't break, that's my first trade. There you go. That would qualify. No triggers through, right at the divergence high. So think of triggers like a car. And this is where Morgan asked the same question. Make a judgment call, right? You're on the line. And I think Morgan was on the line at the bottom. Well, mine was perfect, Morgan. That was termination condition for days. Strong bottom. But Jen, sometimes you're going to have to make a judgment call if it's really close. So let's look at it. If you are making a judgment call, divergence right from that key area with weakness, second lower divergence, triggers roll, no divergence here, strong triggers. Couldn't you get on board with an HVA short just based on that look? I think you probably could. The second lower was the HVA short. You're below all the triggers. You've got momentum all day long, Jen. And this is one of the things, right? This is one of the things. As a brand new user, guys, I blanket you with very conservative rules. A strong top or bottom is a definitive no triggers through termination that reverses the market. Let's be honest with ourselves, though. There's going to be times where you have the indications you need to believe that one half of a trigger through is still okay. Michelle G., it is so nice to see your face in here. Welcome back. Let's see what Pete did. Got that strong bottom, triggers rolled, odds favorable, clear path. The difference is that his clear path here isn't where he took the trade. Here it has the potential to break. And then you broke the one cardinal rule of that momentum style trade, Pete. The rules say let the small triggers get through and then buy a snapback. Your bar is still dissecting its potential to break. And you took the shot at the breakout. And guys, this is where experience pays dividends. Pete knows with this look, with this potential, with this momentum, if this momentum trade fails, it typically turns into the trend trade. And that's exactly what it did. And he just added contracts and got out of trouble. And what a great, great job. 520 over daily objective by 8:30 a.m. And there was someone yesterday saying, well, how do I need all the trades. If I'm going to quit my job, I need all the trades. I can't imagine not being able to live off of $2,000 a day. That's $40,000 a month, guys. That's a lot of money. That's $500,000 a year. I mean, day trading, Morgan. Day trading. That's one of the reasons people have trouble with day trading too as well, is you all think you have to make $1 million a year. You forget that you can have a very comfortable life. A very comfortable life. Miss Anna, nice to see you as well. All these old faces are showing up in my room. You guys think I don't look. I definitely look. Great trading, Pete. Awesome understanding of patterns. Great hold. Great addition. Awesome profits. Well, one of the biggest challenges, you do composite aerospace manufacturing and don't get nearly that much. No. It's, guys, there's a reason that day trading is so coveted. It's because it gives you the potential to do that. And I mean, my gosh, 8:30 a.m. Over $2,000. Can it be done? Yes. Does it happen every day? Maybe not. Some days it's more than that. I'm gonna let you in on a secret. Pete uses trade copiers, which means that $2,000 may have been repeated on 10 accounts. Anybody ever woke up and said, you know what, I'll make $20,000 today? You can. It's possible. It is possible. You watch people do it in this room all the time. What is one of the common threads between the successful people? Pete takes this entry every time. I've seen Pete take this entry 1,000 times. Pete doesn't miss this entry with all that momentum and a strong bottom. Pete does the same darn thing every day. Pete takes the same entries. Pete takes the same exits. He has a management plan. And guys, it's the consistency. And I'm going to go back and I want to do something here. I'm going to flap my gums a little bit. I reference movies a lot. I don't know. Probably because I grew up in the 80s. Do you guys remember The Last Samurai with Tom Cruise And he's trying to fight that guy that's clearly a badass. Guys, the market is clearly a badass. And this little dude comes over and he's like, Tommy, bro, you're getting your ass kicked a lot. Sorry, I'm swearing. I should probably stop that. You're thinking about too much. You're minding the sword. You're minding the people watch. You're minding the enemy. There's too many mind. No mind. And what he's telling them, guys, is that the more you look for, the more you think about, the more you chase, the more reasons you create, the more rules you fabricate in your brain because you think they give you an advantage, the less likely you are to find success. So if you're one of my people in this room that's chasing everything and not finding success, it's okay. It's okay to back off. It's okay to look for one of your 32 trades and get really good at it and force it to produce the results that you want. And then when you're consistent, when you're making money, look for the next one. Add the next one. Because I'm going to tell you right now, and my buddy Ron will back me on this. When you have momentum and path, you will find a way to capitalize. You went to college with his best friend? Right on. I went to high school with a guy that beat him up in 4th of July, the wrestler. He's a good friend of mine in high school. Yeah, so what he did is Pete said, I'm going to get in 4 here. My momentum trade turned into a trend trade. All my rules are met. I'm just going to add 4 more contracts on. And you can see that he gets out at 8. He makes $120 on this one that failed, and he makes 14 times 4, 6, 1, what is that, like 560? So it's about a $600 or $700 trade altogether, 680 right there. 167,000 last year, 11 ticks at a time. Is that right, Ron? You know, you've never disclosed. Everybody has always wondered. $167,000 last year. Never takes a trade bigger than 11 ticks. I can't thank you enough for posting that in the room. Momentum, path, find a way. I mean, it's just absolutely beautiful. Nicely done. You don't have to make $1,000 a trade. You don't have to make $300 a trade, guys. You have to find your trade that you can prove wins more than it loses, and you have to commit to taking that trade. That's it. That's where you find success. All right, Steve Diego, let's see what you're doing. Steve says, I have all the momentum in the world. There's absolutely nothing in the way. I didn't catch that little pullback, and I just get in with momentum and path. And Steve Diego, effortless. Wouldn't you agree? Effortless. Momentum and path. Momentum and path. One of the things that new users do is they see Ron take this trade and they want to be Ron. They think they can just jump into the market and they don't do the study. Guys, don't try to trade like anybody else. You can look at it, but study it. Put the time in. Learn to trust it. The reason Ron's entries are so consistent is because he's got a wealth of time behind recognizing that. The same reason Steve Diego did the same thing going the other direction. It's the exact same trade, just short, and it's perfect. And then Joel, smalls are up, large are down, can't go up, momentum down, rules not met, not my money. Pete, termination, triggers roll, directly into a termination condition, he's consistent. With all this momentum from a strong top, Pete is willing to take a low-risk entry and manage it aggressively. Nicely done, Pete. New users are saying, but he traded into a fib. He absolutely did. He used his chart reading. He used his repetition, his experience, his pictures, his time in the pond. And he said, I'm willing to risk it. Because for 5 ticks and the potential to make $200, do it all day long. I like that. Ron, you trade for a lot of reasons, never because you saw someone else do it. Guys, I destroyed accounts as a brand new user, trying to be my brother. And I hate to admit that, but I don't mind letting you guys in on the things that created challenges for me. I tried so hard to be John Novak in the beginning, but the problem was I was 27 years behind him in understanding how to read indicators. I was trying to do science like Einstein when I just wasn't at that point. Find your trade. Cav, I think you could. Because, Cav, if you taught this class, would you teach them your trades, or would you teach them the most basic, easiest way to find success trades? I teach the basics and the rules, because I think that's the path of least resistance, guys. When I was, I don't know, I guess 30, I went to college. I started college at 30. And I had to go through every remedial math class that you could ever go through. I'm not a math person. And I thought, well, the easiest way to pass these classes when I got to college algebra is I employed my buddy who had gotten a perfect score on his math section in the SATs, that graduated college with a 4.0, was a brilliant engineer in one of the biggest drill-in companies. And I said, I need help with college algebra. And guys, bless his heart, he couldn't dumb himself down enough to go to algebra. His brain couldn't think that simple. It just couldn't. He was too far beyond it. And I think my brother is not for beginners, but you guys with some experience will get a million great things from him. But I teach this class for the new users. And then I use my ability to read indicators for you guys that are finding ways outside of it, because I have the reps to help. And man, I'm telling you, simple pays dividends. There's that odds favorable and absolutely nothing in the way. And Morgan says, why not ride the momentum? And when momentum is why I am in the trade, then as soon as I lose it, I am out. And Morgan, I could hug your neck for that statement. If the reason for entering is momentum, the loss of momentum is a reason for exit. Absolutely beautiful. Better Dad Friday is going to be interesting, and I'm going to tell you guys, more accounts get blown out with Nexgen users after John Novak teaches, because you guys think you can do what you heard him talk about for 30 minutes. Remember that as you go through. He's going to give you some stuff to study, not some stuff to execute in your live accounts the next day. But if you take notes, you're going to have a wealth of information to make you a better trader as you grow. It's true, guys. Oh my gosh, same thing. Put your man pants on. I love this. Stunning large chart. Strong bottom, triggers rolled, up, separated, odds favorable, clear path after fib. Pete is like, let me throw every adjective of positive mental attitude in this look. And Big Momentum says, jump the fudge in. And you did. And Morgan whipped your ass on exits. Just kidding. But it's amazing. Half off at 10, half off at the targets. He made 13 grand on a 4-lot with the NASDAQ. Yeah. I'm not at his speed either. Awesome. Take care, Ron. I'll see you Monday in here. Thank you so much. Gary, what are you trying to set up? Do you have TradingView? Let's go through the basic checklist. Do you have TradingView? Yes. Did you send your TradingView username to Jason to activate the indicators? Yes. Did you put the indicators on your chart? Bingo. That's what we needed. So check it out, Gary. It's so much easier than you thought. So do you have your chart up? You have like a NASDAQ workspace? Did you get the workspaces? Okay. If you're not sure, that's a no for sure. So I want you to go to this page. Hold on. This is it. Here's your link. And Gary, it took me a couple times to get this, so let's walk through it. Do you have a browser open on one of those 72 screens? Awesome. Follow the link and scroll down. Here's your workspaces, Gary. And guys, we don't have that many pictures. We can take a break in the action to help Gary out. Let me know when you're there. We'll just go through it together. Because John's going to talk about this a lot tomorrow, so we'll go through building your NASDAQ. Are you there? Man, I'm breathing better. I'm starting to feel good. All right. So while I hang on, I'm going to click on someone else's pictures. Let me know when you get there. Pete and Morgan took the exact same trade. We saw that one. And then Cav, market reverses. Momentum is strong. And Cav says, check it out. I'm going to get paid trading away from the fib to the fib. And then I'll exit because this could stop the market. And then when I get back to the other side of trouble, I'll see if I can't find another trade. Absolutely gorgeous, Cav. Look at that. Out, break, in. Out, break, in. Guys, you don't have to hope they break. Just let them break. Nosebleed. You found your trade, man. Everything down. Momentum is strong. You just jump in. You just jump in with momentum and get out of trouble. Nosebleed. You're doing the same stuff all the veterans are doing. With odds favorable momentum and room to the fib, you just jump in, ride the momentum, and get out at something that could create a bounce. I love that one, Nosebleed. And I love calling you Nosebleed. It makes me happy. I don't know why. Gary, you're supposed to be on the link that I gave you, not the basic screen. Are you here? I need you here. Because if you're on TradingView, you're getting ahead of yourself. You can have TradingView open, but follow that link and scroll down to the NASDAQ futures. And let me know when you get there. Nosebleed, I hope you're listening, dude. Great trade. Pete, same thing. All the momentum. Let it get below the triggers or below the fib. Pete, letting those smalls break will keep you from suffering the retracement so often. Beautiful job, man. Great trading, Pete. Nicely done. I do have to ask. You were at 2,200 earlier. And now after that winter, you're at 1940. Different account? Or are you hiding losers? Either one. It's up to you what you share. Different account. That's what I thought. All right, Gary. You're there. Awesome. So let's do this. I want you to click View Chart. So when you click it, what it's going to do for you is it's going to bring up that NASDAQ workspace. Pretty basic. I love stacking profits, Pete. So Gary, this is just, it's very basic. There's no indicators on it, nothing, right? Yeah, it's on the mini. Well, that means that you clicked on the micro one. So go NASDAQ Futures 15 1 minute and view chart. And there's no way that link is going to put you on the mini because I just clicked it and there I am. So click on that one. Slow down, take a breath. Guys, one of my biggest challenges when I'm doing stuff new, it aggravates the hell out of my brother, is I rush. I try to get to the next step before I get on the right step. Character flaw for sure. Cav. Termination. Odds favorable. 12,277, 12,277. Trading into all the termination conditions, Cav. Lower risk trade. Took this trade a little early. I agree. Let it get above. Ride that momentum from the fib. But nice hold. Large short advantages for sure. All right, Gary, are you there? And guys, this is for everybody setting up. That's the one, Gary. That's the exact one that I clicked. Bonk. And then here, watch this. I can even do this. There's the exact link that I clicked to. So when I click it, perfect. That's exactly what you need to see. Now this is what I want you to do. That's not the mini. That's the micro. That's just regular NASDAQ, Gary. NASDAQ 100 E-mini futures. That's exactly what you want. Perfect. So what I want you to do is in the upper right hand corner you have a copy button. And I want you to just click make a copy. After you make a copy, I'm not signed in on my browser, so that's okay. But once you click that copy button, you can go to, do you have the desktop version? Cool. So once you click copy from the browser side, what happens, I don't know what of Nexgen means. This is the trading view. This is the pop-out, not a browser, desktop application. Once you click copy in the browser, that template shows up down here. NASDAQ futures, click the arrow, manage layouts. There's your layout. And all you have to do is, if you don't have it built over here, click the new tab, build a tab, create a new layout, and it's just a whole bunch of nothing, right? It defaults to crude oil, has all this stuff on here I don't care about. I'm going to go to my layouts, and I'm going to hit that one that I just copied, NASDAQ futures, and boom, it builds it. Did you click copy? No, just click copy. That's it. I promise you, I won't leave any words out that need to be there. Just click copy. Boom, that's it. Just click copy. And then after you click copy, go to your desktop version. So let me know when you've clicked copy and when you find yourself at the desktop version. Thanks, Cab. I'll see you Monday, man. Thank you for being here. Thanks for being a part of this room. Let me know when you've clicked copy and opened your desktop version. And guys, this is good. This is stuff that you have to walk through. This is exactly what this classroom is designed for, is to help you through some of these things. So I'm just waiting on the thumbs up, Gary. And guys, if you have a question, a picture, anything, feel free to drop it in here. We'll go back and forth. Okay. Is that your browser version or your desktop version? Give me a B or a D. Is it this one that pops out and moves around? Do you know? So when you're on the internet, you've got an internet bar right there. You got a bar that should tell you what website you're on. You don't appear to have that, but I'm not sure you're showing me the whole picture. It looks like you're in the desktop version, which is exactly what this is. So what I want you to do, Gary, and it looks like you've already got it. I don't know what the challenge is. You've got all your indicators on there. You've got everything, dude. What do you feel like you're missing? You have one-to-ones, you have divergence, you have mid-bands, you have trigger lines, you have outer bands, and you have market flow fully loaded. Gary, you have everything you need on there, 100%. What do you feel like you're missing? Is it the zones? Because you have every indicator Nexgen gives you. Perfect. There's your workspace, man. You do have your watch list open, which is okay. So this is your watch list right here. Gives those details. I personally don't like it open. I like to see my whole charts, so I just click on it and it goes away. See it right up there, upper right hand corner? That'll make your watch list go away. You don't need that. We're trading indicators, right? So your chart looks like my chart. The only difference is I have zones. It's the only difference. Well, it's because it's brand new. So let's address that. You're going to love this, Gary. This is one of the things I was telling John was going to happen as we get in. Awesome. Estefania, I'll see you next week. Thank you for being here and playing with us. It's nice to have you back in the room. I will always take blessings. Thank you. What do you think, Gary? Divergence is divergence, right? You know how to use that. Mid-band, you know what that's for. One-to-ones, absolutely no question in your mind what that's used for. Look at that. Small and large triggers. And Gary, I think this is one of the things that John Novak and I talked about as we introduced TradingView to the Nexgen users. There's really not much new. The only thing that's different, Gary, is we can't get Fibonacci onto TradingView. So that's where John talks about chart prime, and he talks about these zones. These are supply and demand. And all they are, areas that can stop the market. That's all it is. Same way Fibs do. It's just different math that goes into them. But they're pretty consistent with Fibonacci. Just not 100%. Does that make sense, Gary? So it's really everything that you're comfortable with. It's everything that you've been doing since you've been with Nexgen. This is, I'll watch this. All right. That's Bugs Bunny, right? You know it's Bugs Bunny. 100%. Is there any doubt in your mind that that is still Bugs Bunny? Ninja Trader's what you're used to. TradingView is the same thing. It's just dressed a little different. It's a little different look than you're accustomed to. So what that means is that you're going to have to learn how to trade a TradingView plan. You're going to have to look at the rules. You're going to have to study the patterns. You're going to have to incorporate it, but you won't have to relearn the indicators because the indicators are consistent. They're there. And Nexgen was teaching minute bars long before Dynamic Renko was even a thing for them. And things Nexgen was teaching. When an area holds, everything says up. Well, you can buy an HVA line right at one of these zones and go up with all that momentum and direction, right? You can find trend trades off a mid-band. You can use momentum for entries. So I hate change, I really do. But man, I have been so excited about this TradingView. So yeah, Pete, let's say that you just need to, like, you need to open it up, right? You're like, oh my gosh, I don't have my crude oil. Are you in the browser or are you in the TV version? Or I'm sorry, the desktop. Desktop? You're in the browser. What I would encourage, and you don't have to, man, go get the desktop app. Because you can open the browser stuff, like that's no big deal. And you can use all those resources, or you can just run it here. So it's just like having tabs in a browser. But on the desktop version, you can have them all instant. Let me see if I can, whoops. David, you can integrate the two. There we go. So let's see what we have. Here is my profile settings. Line set in. Markets. I don't ever use this one, so let me figure out how to open up my stuff. There's the watch list. I have to navigate. David, you can trade using both. You can trade just using TV. You can trade using just Ninja Trader. The way I trade, when I'm trading the NASDAQ, let me see if I can find a picture for you. I like the zones on TV very much. I'm a big fan of the zones. I like using them in conjunction with my fibs. So I'll execute on Ninja Trader, and I'll take a look over here to make sure I'm not running into something bouncy. So you can trade both. You don't have to. I like it. I like using both, and I'll use both to execute. And this morning when I was trading crude oil, when I was trading crude oil, I was using Ninja Trader for execution, and I was using pivots on my 1 minute market flow chart for stop placement. So you can incorporate the two and you'll learn how. And Pete, I'm trying to figure out. I've never used the browser version. Community, products, calendars, pricing, features, brokers. Let's go to the Help Center. What do they call it? Layout. Drawings are off the milestone chart. Written. Oh, so maybe you have to open it. Pete, maybe you have to go and open it. Welcome to TradingView. So yes, so sign in with the browser, and what it's going to do, Pete, is it's going to bump you over to the browser and it's going to ask you if you want to grant access. And you'll just click yes. Yeah, once you download it, Vittorio, you'll have the icon. You just click on it and it opens right up. Have you downloaded the desktop version yet? It's just like anything else. You'll see it maybe in your start menu. Or I just pinned mine. So that would be the first thing. You can't open it without downloading it. TradingView desktop app. So let me give you a link. You will need to pay for data, Gary. It's $7 a month for the futures markets. And that includes crypto for me. So Vittorio, there's your link to get the desktop. The cool thing is you can do it on Mac. So like Andy was saying, what were you asking, Andy? Sorry, I missed that. If you buy an Apple iPad, do I need an Apple iPad Pro or a regular iPad to trade TradingView and Nexgen indicators? I have an iPad Pro, but I don't know if John does. I used mine for tattooing, so I've got top of the line. And then Vittorio, once you do that, it just gives you the link. And then once you click on it, it saves all these. So I just built each one. I've got a tab for the 4 different futures markets. And then I've also got XRP because my wife's got a bunch of crypto and she likes to know. Steve Diego, odds favorable, potential to break, beautiful entry. And you get paid. And then it comes back and sets up the high probability trade and you enter and get paid. Nice trading, Steve. Medium probability trend trade, done beautifully. High probability trend trade, done beautifully. All right, Pete, so you've got your desktop version up. Dig it. So, and you've got crude oil, and it looks like you have your indicators, so that's perfect. So here's what you're going to do. So you're a little wonky, right? It's out of sorts. Right-click on your chart and go Reset Chart View. And that'll tighten it up. And what I find is that if I give it one swoop to the left and one swoop up, it becomes very readable. And you don't have to hit Control or anything. So now I can see everything. And I'll do the same here. I'll just Reset Chart View. I'll give it a swoop to the left and one up. And now it becomes very readable for me. And now what I'm looking at is a termination, right? Hit a zone. Triggers rolled. Going down. I'm going to look for a trend trade or something if they pull back for me. So that's crude oil. And if you want to add more, this will let you build new layouts. You can create a brand new layout. You can open one of your other layouts if you want. Down here, the up button, that's why you're looking at your brokers. Hit that, minimize it back out. If you don't want the noise on the side, guys, that'll give you a watch list. That'll take it away. Play with stuff. Have a good time with it. Break some stuff. But it looks like you're there, Pete. And then the same links that I gave Gary, these are all the workspaces, guys. And if you haven't done it yet, and you want the indicator package, all the Nexgen indicators, all you have to do is send Jason your username for TradingView, and he will activate it. He'll make them good for you. All right, guys. I'm going to take just a minute. When I come back, guys, we can look at NinjaTrader. I've got the premium Cisco because I want to run market flow on my small chart. And you have to have premium for that data. So I run premium because I want the market flow. On TradingView or in the room? Can you guys hear me? I think there's sounds. I believe there's sounds on TradingView. I'm confused on whether Cisco can't hear me talking. Okay, cool. I was like, do you mean on TradingView or in the room? There's sounds on TradingView too. I'm pretty sure I have mine muted. I don't like to hear my trades. And then David, what I was saying is once you get TradingView, to get indicators, send Jason your TradingView name and he will activate them for you. Was that your question, David? I seem to, Andy, because I can't hear it. But John's makes little dings and stuff. The indicators. To get the indicator. So David, hold on. If you want, they're workspaces. So it's TradingView indicators. It's trigger lines, divergence potential. Everything you see on my chart except for the zones, all of these indicators have to be activated by Jason. So if you're comfortable with the NinjaTrader indicators that you've been using for decades, forever, these are all designed. Trigger lines, mid bands, one-to-ones, divergences. Jason will activate because they're not free for everybody. Most people have to pay $99 a month for them. But you've already bought software. You've already paid for your indicators. But in TradingView, they have to be activated. The people that own them have to make them accessible to you. That's what giving Jason your TradingView name, he'll give you permission for the indicators. Does that make sense? You won't. For the indicators, you won't need to pay anything, David. You've already bought them. You've got a green check. You've got a green check next to your name. You've got a lifetime software license. You paid for it. John Novak will give you those indicators. Will not make you pay for it again. You will have to pay for TradingView. You will have to pay for your data. If you want the zones, you'll either have to find a free version or pay for those. But the Nexgen indicators, John will gift those to you. Right now, Pete, these are outer bands. They're the same thing as a mid band, but they show points of exhaustion, and a lot of times you'll see that when the market trades outside of them, they can behave as resistance. They're also a point that may stop a market's forward progress. They're outer bands. And if you don't want market flow, you've got to go down to your indicators and deactivate it, but that is market flow. I don't know how you get the noise off. I'm not sure exactly what you consider noise. You can go through the market flow settings if you want and see if there's something you can do to change it. You can make the dots smaller. You can make the HVAs smaller. Vittorio, there is no opening the charts. Your desktop comes up with what you have. If you need to create a new chart, you're going to create a new layout. And when you copy the layouts from the website, they're going to show up over here. So all you have to do is build it, and then it's already saved. But if it needed saving, let me find one that needs saving. I don't know, I don't have one that needs saving. That's it. When I close my desktop, it's gone. And then when I open my desktop, boom, everything is right back there. There's no opening, no closing, no worrying. Cisco, do you want market flow? Okay, if you don't want market flow, you can do whatever's under premium. So like the first level gives you, I think, the ability to trade 2 charts. The next level opens it up to 5 or 6, 7, 8 charts. And then the premium level will give you what you need to be able to run a market flow chart. And you can always upgrade if you find that you need more than you have. Vittorio, did that help? Once you build it, it's there. You're good. Awesome. I love this. It's so easy. Guys, I can bring this up on my iPad. I can sit on the beach and trade. I can be on a road trip in the car with a hotspot and trade. So it's not that you're saving the chart. You're saving the layout. So if I wanted to, Vittorio, just have one chart. All I wanted was the 15-minute, the big chart. I would save it. And then if I got rid of it, it's saved. And then I could do a new one. And now it's one chart. Pretty cool, right? And then you can go to all your layouts, and they're all here for you. And then if I go back to my NASDAQ futures, it puts me back on my 2 charts. Pretty cool, right? Guys, you're going to have to play with this a little bit. You really will. You're going to have to go through. You're going to have to break some things. You're going to have to figure out little bits here and there so you're comfortable with it. It's just new. New is great. I love new. But we can't expect to have new and be 100% proficient. So go in and just play with it. And here's the one thing that John is going to tell you guys tomorrow when you flood him with questions, and I won't. TradingView tips and tricks. Guys, there are 60 million users on TradingView. There are probably 60 million videos on how to do things. Don't be afraid to Google it. GTS, guys. Don't be afraid to use Google as you're going through and doing this stuff. I'll give you every answer I have. John Novak's going to tell you to Google it tomorrow. Hey, John, how do I do this? He's going to like, dude, 60 million users. Everything you need about TradingView is there for you. TradingView Tutorials 2024. The ultimate trading view tutorial. Ultimate, guys. Don't be afraid to study a little bit. Don't be afraid to get a little dirty, to go in. Learn some stuff. You'd go to 3 charts and you'd build it, Gary. That's it. Why? Why do you want to add a 5-minute? You haven't even started and you're uncomfortable with it and you're already adding stuff. Be basic, man. Learn how to do the basics before you start adding stuff. Too many mind. Hell, I could build 12. It's not going to make me a better trader. It's going to confuse the hell out of me when 2 is enough. Throwing that out there. Guys, I'm going to take a couple minutes. I'll be back and then we'll finish strong. If you have questions, drop them in. If you have comments, drop them in. If you're wondering if that's a termination condition, guys, the answer is yes. I'll be back in just a moment. Talk amongst yourselves. Strong. Do you guys remember when you were learning to drive a car? Some of you will. Some of you are older than that, maybe. Guys, when I was learning to drive a car, my hands were at 10 and 2. When I was learning to drive a car, the radio was off. When I was learning to drive a car, the speed limit was mandatory, right? Back the old shoebox roadster, Steve. And it was because I wasn't confident driving a car. I thought I was. I was 16, 15. But the reality is my dad harnessed me. I wasn't allowed to speed with him in the car. I wasn't allowed to listen to the radio. I had to focus on the road. My hands had to be on the steering wheel. Guys, that was what I had to do to build the muscle memory to become comfortable driving the car. 6 months later, the radio's on. I'm doing all right. When you start driving, you couldn't tell anybody what you saw between point A and point B. You don't know what store you passed, what color the car in front of you was. Man, you'll even miss out on just everything around you. But when you begin to get comfortable with the mechanics, when you begin to get comfortable and develop the muscle memory, you can begin adding things. And guys, trading is similar. Trading is similar in that if you try to do everything before you're good at the basics, you're just going to drive yourself nuts, guys. You're going to wonder why you can't find trades. You're going to wonder why you keep getting run over. I used to do this in the room. I'm going to do it again. When I'm looking for a high probability trend trade, get off of there. I don't like all this stuff. When I'm looking for a high probability trend trade, I have 3 rules and I have 2 charts, guys. I have 5 things. That's it, just 5 things. 5 things isn't difficult for most people. If I add in the 50-50 trade, not only am I thinking about those 5 things, but I've got 2 different rules added. And it's still 2 charts. It's still different rules. It's still different reads. And now I'm thinking 7, 8 things, right? If you throw in management and how you have to manage it, I'm looking at, between both of them, probably 12 different things to think about. And then I try to put in an HVA trade. And then I try to add another chart. And then I try to put in a momentum trade. And then I try to get market flow in there. And I keep trying to add and do all this stuff because, let's be honest, if a little is good, then a lot is amazing, right? Guys, it can't be further from the truth. The whole reason you guys find success as new users, the whole reason people typically get to where they want to be sooner than later is they don't worry about everything. They worry about the best things. They learn the core. They get the muscle memory. And then from that foundation, they grow, guys. And I'm going to tell you guys, and I'm going to throw this out there, and you think about it as I'm going for the next 4 days. If you're not consistently making $300 to $400 a day, that's it. If you're not consistently making $300 to $400 a day, why are you looking for more? If you're not consistently making $6,000 a month with your trading, why are you trying to find more? Is there any doubt in anybody's mind in this room that if you followed the KISS plan to the letter, do you believe you could be successful with one great entry and one great management setup? What do you guys think? Has anyone done it? So when people aren't making money, when people are adding more, when people are trying to find all the trades and not the best trades, guys, this is where I put the challenge in front of you. I triple dog dare you. That's right. Triple dog dare you to follow the KISS plan for 5 days. Tell me how it goes for you. Most people that do it find themselves in an 80% win range. I've had people tell me that I'm absolutely full of crap and that Nexgen is snake oil. And we've reviewed, taught, and followed the KISS plan, and those same people find success in the market. Guys, if you're not finding success in the market, it's not, David, I'm glad somebody got that. It's not because your indicators aren't working. It's not because the market hates you. It's because you're not following a plan, guys. You're not following a trading plan. A trading plan is your Bible. A trading plan is 100%. It's a framework that outlines your goals. Yeah, you knew this was coming. Your goals, your strategies, your risk management, and evaluation for trading activities, guys. It's a systematic approach. When to trade, how to trade, ensuring consistency and discipline. Guys, if you're not hitting your goals, it's not because you don't have enough indicators. It's not because you don't have enough charts. It's not because you don't have enough rules. It's because you're not following your damn rules. Stop adding more. Learn how to do one thing great and then move on to the next if you feel like you need it. I believe that if you do one thing great, you're less likely to look for the next trade because you don't need it. This is the S&P. What did that tail look like? Whoops. Look like I'm going to crash Ninja Trader if I do that again. At 10:10 a.m. Not my money. Not my trade. $50-50 trade. Perfect entry. Easy money. 50-50 trade. Perfect entry. Easy money. 50-50 trade. Perfect entry. Easy money. Guys, if you're not up money trading the S&P, it's not because you don't have enough indicators or the right patterns. It's because you're not following the plan. It's because you're trying to find more. Guys, I just went through the S&P. That is 9:30 a.m. It is 11:27. In 2 hours, you should be goals met on the golf course being pissed off about something else. The difference between successful traders and traders who struggle are successful traders know that it's better to do absolutely nothing when the rules aren't met than it is to hope for a win, than it is to try to make something happen. I mean, my goodness, how much money did the market give away today for you rule followers? And more importantly, how much money did the market take from you? Breaking rules. There's got to be a point in your trading where you stop worrying about the money and start focusing on the process. Here I go behind the pulpit again, guys. Sorry. But it's truth. It's gospel truth. Ron told you earlier before he left, $167,000 on his trading last year, and he never takes more than 11 ticks at a time. Let that sink in. Ron's got two trades in his trading plan. He enters them exactly the same every time. He manages them exactly the same every time. $167,000. If you're not making $100 a day consistently, if you're not positive every day, you have to rethink your approach. I've given you the approach. You have to decide if you want to accept it. And guys, I'm telling you, doing nothing's the hardest thing you'll ever do. It's no fun to be bored. It's no fun to not enter the market. I discovered this. This is my new distraction when my rules aren't met. I play golf over on the side, guys. I play solitaire over on the side. I play blackjack. I play Scrabble. I draw pictures. I've got a sketch pad on my desktop. I do anything other than try to break my rules. I still break my rules. Full disclosure. I still break my rules. I have days where I trade my opinions rather than my plan. Those are what I like to lovingly refer to as losing days. More often than not. They're avoidable, guys. Avoidable losses. Believing the market had to continue up because it was a strong trending market, even when you didn't have areas inside of triggers. Breaking rule number 3, mad as hell at the market. The pulpit helps. A lot of new users think because my last name is Novak, I don't make mistakes. I wish that were true. I wish that were true. Guys, I can teach the hell out of this software. I can teach you to recognize patterns. I can teach you to identify a strong top or bottom. I can give you the rules. I can give you the plan. I can teach you momentum. It's not true, David. I can show you what weakness looks like. I can show you which chart typically wins. I can teach you how to annotate a chart so that you can get live feedback. I can even remind you the shit's a little overwhelming in the beginning. And keeping it simple will help get rid of that. I can show you exactly how to enter the market, exactly what the pattern looks like. I can show you where the easiest money is. The only thing that I can't do is make you put in the work to get good at this, make you understand the concepts, and make you trust that there's a better way than hope. All right, that's the end of my pulpit, guys. My wife is going to love that I can't talk in the car for 30 hours. What do you guys want to talk about? What can I do for you guys? How can I help you? What are you struggling with? One more movie reference for you guys. If you haven't watched this movie, go watch it. If you have never watched Moneyball, go watch it. And I want one thing to stick with you guys. When you watch it, let me see if I can find it. Oh, it's saved in my searches. He gets on base. Base hits pay bills. So Vittorio, you want to save the icon? So down here in your trading bar, when it's open, do you see it? Follow the rules. So right click on it, Vittorio, and you're going to have the option to pin it to the taskbar. And then what that'll do is that'll keep it down here for you always. You'll just be able to right click and go on it. And I think if you look over here, you can pin to the start bar, or you can even, and let me make sure that I'm not lying to you real quick, is you can grab maybe that icon. No, you can't pull it from down there. I don't know. I don't know how to get it on your desktop. I know how to get it in your taskbar. Sorry. Taskbar is kind of like your desktop. I mean, you can see it at all times. Excuse me. Todd, we might be related if you like my analogies. Novak men are notorious for horrible analogies. You guys, I trade NASDAQ more than anything. You can put your most important market to you up front if you want, or you can have it anywhere. You can go in between them. I love how easy that is. They still haven't broken that fib with no triggers through. That's weird. Avoidable losses, guys. Vittorio, did you at least get it pinned to the I think you can pin it to the start menu. Oh, that's all the files I did. Hold on. We're going to try something. How do I get an app icon on my desktop? There you go. To add an app icon to your Windows desktop, you can drag and drop the app from All Apps list in the Start menu to the desktop. Alternatively, you can create a shortcut by right-clicking in the app in the Start menu, select an open file location, then send to the desktop. There you go, Vittorio. Google makes me look smart. It does. Google and regurgitating John Novak's brilliance makes me look smart. There you go. These are good questions, though. When you guys ask these questions, it's awesome for me. Because someone's going to ask them again, and now I know how. So, knowledge is great. Let's talk about the gap theory. What do you say? So guys, there's this deal. If price accelerates away from the large triggers and hits something solid, whether it is a fib, a mid-band, a yellow 1-to-1. If your large triggers are a full bar away, if you hit an area and the large triggers are a full bar away, price is likely, not guaranteed, to close the gap. Shouldn't be trading into a termination condition anyway, right? But if you were thinking about taking a chance, price is more likely to come up here to these large triggers. And it sure hasn't gone down yet, has it? We'll see if they close that gap. Guys, it's more likely to close that gap if you're not coming from a termination condition that reversed the market. That's the gap theory, guys. Price acts like a slingshot. It's the same reason, it's the exact same reason that we look for entries inside of large triggers, because price closes the gap to the large triggers. And it's also what defines a mid-band as a termination condition. When the gap theory is true and it's a mid-band that price reached, the mid-band is a termination condition. And this is it, live in front of you. Yeah, were you able to do it, Vittorio? Right click. Maybe it's over here. So right click. Here we go, pin to the start. So I pinned it to the start, which means that it should be up in here, right? In theory. I've got too much stuff up here. Unpin from the start, unpin from the start, unpin from the start, unpin from the start. So trading view is pinned to the start. There it is. I'm going to right click and I'm going to go to, I guess, app settings. No, that's not it. Man. And just drag it to the desktop from the start menu. That sounds way too easy. Oh my goodness. How easy is that? No, Joel, what I said is that it is more likely to close the gap if it's not coming from a termination condition that reversed the market. But there's a termination that reversed the market and it still closed the gap. There's a weak bottom, Joel, and it closes the gap. It closes the gap more often than not. That was good, Andy. Thank you for that. But I'm saying it's more likely to close the gap if it's a weak top or bottom. That's it. All you need to know, Joel, is that if price reaches an area and the large sugars are a full bar away, don't worry about anything else. Just know that it could close the gap. That's it. Don't overthink it. No short trades. Keeping it simple, guys. Keeping it focused. Keeping it basic. Not thinking about too much. There are literally 152 bajillion ways to use this software. It has to hit an area. If price reaches an area and the large sugars are a full bar away, that's your recipe. Price reaches an area, large sugars are a full bar away. That's the recipe. I don't care if it's a fib, a mid-band, a 1-to-1, divergence high or low, Joel. If price reaches any one of these areas, there they are, and the large sugars are a full bar away, price may close the gap back to the large sugars. That's it. But it is the gap theory that defines a mid-band as a termination condition. So if I have a mid-band floating in the middle of nowhere, no areas, nothing at all, there it is, mid-band's a termination condition. Let me see if I can find it. Mid-band, well, the triggers didn't roll. Mid-band, large bar away. That's it. You got it, Joel. Perfect. Mid-band, full bar away. That's what defines the mid-band. There it is. Mid-band, close the gap. Whoa, bring you guys over there. Mid-band closes the gap. There it is. There's the perfect picture of when a mid-band is a termination condition. When price reaches it and the triggers remain a full bar away. But the gap theory happens off of areas. It happens off of everything. But that is the one time, the only time, that the mid-band is a termination condition, is when those large triggers are a full bar away, because it's likely to close the gap. Good stuff. Boom. And then made it to the fib, and now we'll have to see what they want to do. Good stuff, guys. What else? Did I miss any questions? Vittorio, were you able to do it? All right, guys, remember. All right, so Vittorio, go to your start menu. Actually, start this way. Go to your search bar and get to your TradingView app and pin it to the start menu. That's got to be the first thing that you do. You have to pin it to the start menu. And then once it's pinned to the start menu, all you have to do is scroll down and find it. There it is right there. And just click on it and drag it over to your desktop and just drop it right on there. So you're just kind of like sliding it over and drop it. And that'll get you to where you got it. Okay, cool. Awesome. And thank you, Andy. I appreciate that. You helped too. And that's why we don't fight the gap theory. Pretty cool, huh? Whew. Reminder, guys, John Novak has the room tomorrow. Termination that reverses the market, Joel. What do we call that? Strong top or bottom, right? Do you see strong top or bottom on the rules for the high probability trend trade? It's not there, is it? So in order to take a high probability trend trade, I don't have to have a strong top or bottom. I need strong triggers, no terminations, and an area inside. But Joel, if I have a strong top or bottom, just icing on the cake. If I have a strong top or bottom, it's the highest probability trend trade I can take. That's it. It's one more level, a giddy up of awesomeness, of amazingness. If you have it, great. If you don't, that's okay. As long as you have momentum, path, and entry, you have a high probability trend trade. You have your pattern. Dang it. Dag nabbit. You could take that off of your list and never worry about it. We put it on there, Joel, because when I talk about high probability trend trades, the best of the best, if you have a strong top or bottom, that is the best look ever. That is the highest of the high probability trend trades you could ever take. But it's not the only. And that's why we say it's not mandatory. Because the rules can still be met without it. You're glad I don't have a microphone? Or glad Joel doesn't? All right, guys. So tomorrow, when John Novak comes in this room, he's going to give you a lot of trading view help. He is going to talk about entries. He's going to talk about exits. He's going to talk about management. It's my pleasure, Joel. I want you guys to be successful. And he's going to give you a lot of information. What I want you guys to do, this is me being protective, I want you to stick to your plan. I want you to take what he says, learn it, be cool with it, but I want you to stick to your plan, guys. Get really good at something, and then you'll be able to add. I've been doing this for 5.5 years now. I still don't take all the trades John Novak takes. I still can't manage as effectively as John Novak manages. We read our indicators absolutely the same. We know exactly what they're telling us on the exact same level. He's got different pain tolerances than me. He's got different pain tolerances than most humans. And he's an amazing trader. And he's gonna help you guys see things that you just don't see. And that's pretty cool. I'm only missing one day, Todd. I've got just a short little drive up to Washington State, and then I'll be back Monday morning, ready to go, feeling amazing. So, guys, I'm going to call it. I'm going to load up my car, and I'm going to giddy up. Roommates Amazon Green Parrot, bit your ankle. I like it. See you in Washington better, Dad. I think it's closer to, it's 30 hours. It is 30 hours, so it's a pretty good drive. We're breaking it up in 4 days. We're doing Amarillo today. We're going to Fort Collins, Colorado tomorrow. We're going to go to Bozeman, Montana on Saturday. And Saturday is Nexgen Jen's birthday, so we're going to celebrate her birthday in Montana and then drive over to Washington. So, guys, thank you for all the time and effort you put into this classroom. Have a blast with my brother tomorrow. Make him take breaks. Tell him to go stand up and walk around a little bit. I've been there, Joel. I love it. I love Glacier. We did that for our 25th anniversary. We went to Banff, and then we went to Glacier National. It is gorgeous up there. We're going to do a lot more, too. We're going to be about an hour south of Coeur d'Alene. So a weekend in Coeur d'Alene is on the books, too. All right, guys. I will see you Monday morning. Take care, everybody. You guys be good.